Intel, your favorite semiconductor company year to date, is doing amazing. It's up almost 21%. And from its year to date low, the stock is up almost 30%. On today's episode, what I want to do is just take a closer look at some recent news that have come out, I want to say, in the past 7 days for Intel, and some big wins for its Foundry business. Let's jump right into it in today's episode. So the first one I'm going to take a closer look at, I do believe has huge potential in the long term and can overall help their Foundry business grow. So yesterday on April 12th, we did hear that Intel Foundry and ARM announced a multi-generation collaboration on leading edge system-on-chip designs. So what does this mean? Well, Intel Foundry Services, IFS, which is the chip manufacturing side of Intel, and ARM announced a multi-generation agreement to enable chip designers to build low-power compute system on chips on the Intel 18A process. For those not familiar with the 18A process, this is going to be roughly their 1.8 nanometer manufacturing process. And this is a big win, right? It's definitely a big win, even though there's no monetary reaction to it at the moment. It pretty much means that when 18A process is ready for production on Intel side, and that might take some time, a few years from now, when you are building some form of chip on ARM architecture, you will be able to set that chip to be manufactured on Intel. So it opens up, I want to say, the door for potential more customers to Intel thanks to this. And they even mentioned, right? They even mentioned that this collaboration will focus mainly on mobile system on chip designs first. But obviously, with the door opening, it can lead to potential design expansions into things like the automotive market, Internet of Things, data centers, aerospace, and government applications. In this presentation, they also talk a little bit about the process technology that they're getting through Intel 18A. I don't think there's much to discuss there as form of investors. Obviously, they're going to talk about how great their upcoming process is going to be. I think the big win here is now they have the door open for potential customers to come to their Foundry business. Now, if they get those customers, that's a whole different solution or a whole different story, and it all depends on how well their process node goes. But at least the door is open, and I think this could definitely be seen as a bullish case for Intel and their Foundry business. Before we go any further, I want to thank you for watching, and I need your help to reach my goal of 30,000 subscribers by the end of the year. So if you can do me a favor, hit that subscribe button and thumbs up. Also, if you want some fantastic insight into the semiconductor industry, join my other channel, Semiconductor Investing and More, where I use my electrical engineering background to break down the semiconductor market. Finally, I want to thank the Motley Fool for sponsoring this video, and check out fool.com/Jose for the 10 best stocks to buy now. With that link, you get a promotional offer for their subscription service. Now, let's continue with today's episode. Kind of continuing into their Foundry business, Intel, thanks to the CHIPS Act, they are increasing their manufacturing here in the United States. But they're also increasing their manufacturing in other countries. One of those other countries was Germany. Unfortunately, Intel said a few months ago that, hey, Germany, originally we thought we were going to build a plant here, and this is what we thought the cost was going to be. But due to all the increase in cost from energy, from manufacturing, for people time, we actually need more money to kind of build a fabrication plant. So we need more subsidies from you. So we did hear or have some reports here that Germany pushes back on Intel and says, sure, we'll give you more money to kind of build here in our country and kind of expand the chip manufacturing here in Germany. But for you to get more money, you're also going to have to spend more money as well. So, I think Intel might have just been trying to see how much they can push and how much money they can get out of these subsidies. I think they've kind of hit their limit. I don't see this kind of stopping Intel from building the plant in Germany, but it's definitely going to be something to keep in mind out as we continue to see Intel really pushing into this manufacturing business. I kind of forgot one thing about the previous topic where we're taking a closer look at this ARM architecture and Intel Foundry Services collaboration. One thing in this press release, if you take a quick read, they do kind of hype up or mention a lot that obviously the manufacturing is either going to be in the US or in the Europe or in Europe, right? So I think those are little shots at TSM and kind of their geopolitical tensions that they're seeing, and Intel's pretty much saying, hey, if you kind of build your chips with us, you don't have to worry about any of these geopolitical issues, as we are based in the United States and we're also going to have plants in Europe as well. So the next topic I have for Intel is, if you have been following Intel, one thing that they are doing is they're divesting out of small businesses or businesses that they don't believe are their core products. And there were some reports that there is a new business that they are leaving, and that is the server business. And no, don't worry, it's not their server CPU. Intel actually has a pre-built server system or business where you can go to Intel and kind of have your pre-built server purchased. I want to say probably something like this tends to have low margins. So if I was an Intel investor, this would be a happy thing, because in the long term, there's plenty of server builders out there. I don't think Intel really needs to be in this business. So another great way of kind of the company divesting in positions or businesses that don't really mean much in the long term of things, right? I don't think there's much long-term potential here. I think they rather have kind of their investments and money being used in other parts of their business, like their foundry, like their chip manufacturing and their chip design. The final bit of news is we do see that Intel CEO has kind of made a visit in China. We also heard last week, I believe last week, that Intel kind of cut off some of their GPU products because they were trying to hit different markets. There are rumors right now that Intel is kind of getting their GPU products to kind of be fine-tuned and kind of tweaked down to go into the Chinese market. We all know that China has, United States has some export rules in China where NVIDIA, for example, can't send their H100 to China, but they have the H800, which kind of meets the regulation needed to bypass those regulation process. So Intel also has some GPUs. There are reports that maybe Intel is doing the same thing of creating a weaker down version so they can send to China. In my opinion, China, this might be good news for Intel, because Intel is very dependent in China, especially in the CPU market. So if they are seeing some growth in the GPU market, or they're building and sending more productions there, it might be meaning that, hey, this kind of slowdown that they were seeing in China might be over, and maybe they might start to see some growth in that market again. So pretty interesting news for Intel. It's kind of a funny one where I don't really have too much negativity to say on Intel. I'm not a shareholder of Intel by any chance, but it definitely started to look a lot more attractive a few weeks ago. And we actually did a podcast episode on it when this company was closer to like $27, maybe even $26, where we discuss, hey, Intel might be kind of reaching its bottom in the stock price. And at the moment, it definitely looks like that was the case. But obviously, it's too early to tell, and anything can happen with this market in form of macroeconomics, in forms of over inventory correction, in forms of individual market weakness and pockets of strength as well. So interesting company, not in my portfolio, but in all honesty, at these prices, I don't think I would be 100% mad if it was. So I hope you guys enjoyed today's episode. Take care, have a good day, and see you next time.